Hello and welcome back. My name is Jason, Forex Traders Live, and this is another free video update, free market preview. Taking a look at what's going to happen into next week, where we think the market's going to go, and give you guys some good insights on some longer-term trading opportunities. If this is the first time that you're joining me, the first time you're seeing the video, I want to thank you so very much for doing so. I really appreciate the fact that you're taking the time to see a little bit about what I do and kind of look at some different trading decisions that I'm making. And for those of you who are regular subscribers, regular viewers of the free video update, I want to thank you especially for continuing to come back again and again. I'm glad you guys are seeing some value and some good, some good value out of what we're doing here. But I got a lot of things I kind of want to run through today, and we're going to start out with the Swissy here. Swissy has just been on a really solid ascent, as you can see, from about 99s. Now sitting at about 115. We're at a 1618 extension here. Let's bump this out to a weekly. Actually, we may be able to do it. No, let's bump out to a weekly. I'm going to go ahead and bump out here to the weekly. You can see 786, 1618 extensions coming in right there of the last impulse leg. If we roll back out to the daily chart, you'll see now consolidation 1, 2, 3, 4, 5 days kind of holding that line all last week. Really good short opportunities here. Where would I look for the market to go here? Well, assuming that the market does choose to terminate right here, bringing in the Fibonacci retracement from the last impulse leg, swing low to swing high, I would see us coming back down into, right here around the 1215, 1230s range. Just simply because that's kind of where the market stalled here before pulling back. A really nice look at that. If I go ahead and bring the chart forward, you'll also see just below the 618 here, we've got structure resistance coming in. Should be support if we can get all the way back down there. So there's a significant amount of profit potential in this short entry. And this isn't the first time that I've tried to get short around this area. I tried back here near this double top. Market blew right through that. I tried before the Greek fiasco, and that did not play well. So this has been, sometimes you have to try a couple of times here before you find a nice winner. But the risk-reward profile on these types of trades are so good that you can afford to take, you can afford to be wrong once or twice before you're right and still be a winner. Looking over to the euro now. Now you're going to notice a little bit of difference here in my viewpoint on the euro versus the Swissy, and they're fairly inversely correlated. So there is going to be, this is interesting the way this kind of plays out, because the euro, you see the major support line coming in here, 23.29. That's that major support, and taking the down leg there, we're looking at a weekly chart right now. AB equals CD move. We'd be looking for a move down into 114s. So I do anticipate the euro to continue to roll over. I don't think that that's any, I don't think I'm really being all that crazy with that call. I think most people would want to be short euros right now, but mine isn't based on the fact that Greece is having problems or Spain and Portugal have potential problems. Mine's based strictly off of technical analysis. As you guys will remember, we were looking at a 3 drives pattern down into about 128's area where I wanted to get long. That happened about the time that Greece had its little disaster. Ended up, making a little money on the rally that happened there on the $1 trillion bailout, and then balance being taken out on trail stops. Now that the market's we've had a support here, 2 weeks of support against previous structure support, but this week closed below those 23.29's area, the 23.30's area, and I would have to say that we'd be looking at continued downside momentum here to 114's. Looking at New Zealand yen, we have a completion of a 127 extension. Market has pulled back into almost a 382 retracement. If we can get there, those of you who are clients will be looking for a potential Fibonacci failure pattern here to trade that. This is again on the daily chart, New Zealand yen. But for right now, holding pattern, but market does seem to have found a bottom right there against those 60s level. Looking left, a little bit of support in there. So flipping over now to Aussie dollar. This is actually a really nice one. Market has pressed all the way down. We've had a nice little rally here off market being, extremely oversold. We're looking for those 382s. Those 382s come in right along that structure support line. You can see the channel that we had been in. Market now broke out of that channel. We're pulling back. That 382 is going to be a key resistance level. And if the market can hold those 382 levels, we'll be looking at continued downside. Again, for pro trader clients, be looking for that Fibonacci failure trade there. Excellent opportunity. Longer term time frame. The last thing that I want to do is I want to go ahead and pull over a couple of things that we had been watching, and I want to show you guys, first of all, that it's not just on these longer term time frames that you can find some of these ratio trades. This is what I've got on this chart is a paint bar study. It's a proprietary study that we apply to the chart that really gives a nice visual representation of when the market's in bull continuation or bull pattern, bear pattern, versus kind of an undecided or a neutral pattern. And you can see those indicated by blue for uptrend, red for downtrend, and of course gray for neutral. And what we saw here recently on the 5-minute chart just this last week, this was Friday, market pressing down, U.S. session, so this is during the AM session in New York. Market presses down, we get an impulse leg, retraces into the 382, market rolls over, we get short, target one hit, 127 extension for about 60 pips of profit in there. And this was one day. We've had several winners like this over the course of the past 2 weeks. This type of trading, this Fibonacci pattern recognition, works on any time frame. It doesn't matter whether you're trading weekly charts, daily charts, hourly charts, 5-minute charts, or even down to tick charts. Charts are charts. Markets move in 3 different directions. They go up, they go down, and they go sideways. And if you learn to recognize the pattern, if you learn to understand the ebb and flow of what the market is doing, you can take advantage of that regardless. There's another great example of a trade that we're currently involved with in the trading room. ABCD pattern up into a 127 extension. We got short on the hourly, Australia dollar, short the hourly. Market pulling back now. What would we expect? Well, we would expect a pullback into this previous structure resistance line. We think that's going to be support. So if the market does continue to roll over here, as we anticipate it will, we think that's going to be a really good spot to look for targets. And we move from about 85.40 down to about 83.60s. So almost 100 pips of profit in there, if we can get there. Again, it's a question of if. The last one I'll show you guys is pound yen, 2-hour chart. You guys will see the impulse leg here followed by the pullback down into the 382 retracement. 382s appear to be holding. We call this a Fibonacci failure pattern. If the market rallies, we want to be long. So we go ahead and we have a set of rules and a set of conditions that we use in order to analyze the market and make decisions as to, are we going to be trading the counter trend, where we're going to be betting to the downside, or are we going to be betting with the trend? And there are specific rules for each of those trading calls that we might make.